What if you could make money while you sleep? Not by chance or luck, but by letting a robot do all the trading for you. That's exactly what I tried for 7 straight days. No charts, no late-night panic sells, no checking price alerts every 5 minutes. Just bots doing all the heavy lifting. Sounds like a dream, right? Well, it kind of is, and kind of isn't. I tested a bunch of crypto trading bots with real money, real trades, and real results. And what I found surprised me in more ways than one. Some bots were like having a calm, smart assistant. Others? More like a toddler pressing random buttons. Here's everything I experienced, from start to finish. We're counting down from number 10 to number 1. 10. Setting it up was easier than expected. I went in thinking I'd need to code or at least understand some deep tech stuff. But honestly, most of these trading bots were super beginner-friendly. Platforms like CPT&x, 3 Commas, and Bitsgap had ready-to-go strategies, clean interfaces, and step-by-step walkthroughs. You just connect your Binance or Coinbase account using an API key, pick your bot strategy, and press start. That said, I still had to be careful. One small mistake in settings could send the bot into overdrive, buying or selling too much. I took my time reading every description and triple-checked the numbers before letting it loose. So if you're wondering whether bots are only for techies, they're not. But it still pays to move slowly when real money is involved. 9. Bots make a lot more trades than humans. Here's where things got real. Bots don't need sleep. They don't get tired. They don't second-guess themselves. They just trade, non-stop. On my first night alone, I woke up to more than 70 trades. Most were tiny profits, like cents on the dollar. But they added up. This kind of high-frequency trading is something I could never do manually. It also showed me that bots really shine when markets are volatile. While I'd be trying to figure out whether to buy or wait, the bot already executed 5 trades and moved on. Of course, not all of them were winners, but the speed and volume were impressive. It felt like I had an assistant working 24/7. 8. Not all bots work the same way. Each platform had different types of bots. Some followed simple rules like buy low, sell high. Others used more advanced logic, grid trading, arbitrage, trailing stop losses, and more. For example, the grid bot on CPT&x splits your capital into multiple buy and sell points. It works great when the market moves sideways, catching small gains over and over. But when Bitcoin suddenly spiked, my grid bot couldn't keep up. It sold too early and missed the write-up. Another bot tried arbitrage, looking for small price differences between exchanges. That sounded cool, but I found it less useful unless you're trading with big money. I learned quickly that no one bot fits every market. You have to match the strategy to the current conditions. And that brings me to the next point. 7. Bots don't read the news. This one kind of hit me in the face midweek. There was a sudden dip in the market because of some bad regulatory news. While I was checking Twitter and reacting to the headlines, the bots kept trading like nothing happened. Some even bought more during the dip, thinking it was just a normal price swing. It reminded me that bots follow patterns, not headlines. They can't feel fear or read context. That's both their strength and their weakness. On one hand, they don't panic sell. On the other, they might miss the reason a price is crashing in the first place. So if you rely fully on bots, you still need to keep an eye on market news. Because if there's a major event happening, your bot won't stop to ask, should I hold off for now? 6. Some bots were just bad. Let's be honest, not every bot is a genius trader. Some were pretty awful. I tried one on a newer platform that promised AI-powered predictive trading. Sounds fancy, right? It wasn't. It basically bought high and sold low repeatedly. I lost about 9% in a single day. Turns out, just because something sounds advanced doesn't mean it's actually effective. The best performing bots I used were often the simplest ones. Clear logic, basic rules, and low fees. So don't get caught chasing buzzwords. You're better off testing slow and starting with small amounts. And always research the platform before trusting it with your funds. 5. Emotions were completely removed, and that was a relief. One thing I didn't expect, how relaxed I felt once the bots were running. No more second guessing, no more obsessively watching the chart. I checked in maybe twice a day just to see the results, but that was it. Bots don't panic when prices drop. They don't get greedy when prices rise. They follow their rules every time, and honestly, that's refreshing. As a human, I've made way more emotional trades than I'd like to admit. With bots, all the emotion was taken out of the equation. I wasn't tempted to just hold a bit longer or sell right now. That peace of mind alone made the experiment worth it. 4. But that also meant I wasn't learning. Here's the flip side. Because I wasn't making the decisions, I didn't really learn anything new about trading. The bots were doing all the work, which is great if you want passive trading, but not so great if you're trying to get better. By the end of the week, I could see the profits and losses, but I couldn't always explain why they happened. That made me realize bots are more like tools, not teachers. If you want to become a smarter trader, you still need to study patterns, strategies, and market behavior yourself. So while bots can help you automate trades, they won't make you a better trader unless you're also learning on the side. 3. Profit? Yes, but don't expect miracles. Let's talk numbers. After 7 days, I ended up slightly in the green, around a 3.2% gain overall. Some bots lost a bit, others gained more. The best one was a simple grid bot on Ethereum. It made steady profits as ETH bounced up and down all week. But don't expect magic. Bots aren't going to turn $100 into $1,000 overnight. They work best with patience, small profits, and consistent strategies. 2. Security is a big deal. This part made me nervous at first. To use a bot, you have to connect your exchange account using an API key. That gives the bot access to trade on your behalf. Most bots don't get withdrawal access, which is good. But still, if someone hacks your bot account, they could drain your funds through bad trades. I took extra steps to protect my accounts. 2-factor authentication, IP whitelisting, strong passwords, everything. I also made sure to use platforms with a solid reputation. You should never ignore security just because a bot looks legit. Always double-check what permissions you're giving and never grant full access unless absolutely necessary. 1. Would I keep using bots? Yes, with limits. After 7 full days of testing, I can honestly say that crypto trading bots are useful, but they're not perfect. I'll keep using them, especially for boring sideways markets where manual trading gets tiring. They save time, reduce stress, and handle repetitive trades way better than I can. But I'm not giving them full control of everything. Bots are great assistants, but I still want to be the one in charge. That means keeping an eye on trends, adjusting strategies, and knowing when to step in manually. If you're someone who hates babysitting trades or wants a more passive approach, bots might be a great tool for you too. Just don't go into it blind. Start small, test carefully, and always stay informed. So that was my 7-day experiment with crypto trading bots. It was exciting, frustrating, and surprisingly educational. If you found this helpful or interesting, hit that like button, drop a comment about your own crypto experience, and don't forget to subscribe.